Hello everyone, happy Friday. I'm still in dark mode, so sorry about that. Let's talk about market and our portfolio and position. For this week was very good for our portfolio. Most of us recover completely from the huge 10% market decline. Uh, Personally, I am already plus 3% from beginning of the year. I hope all of you doing the same well, maybe a little bit less. Uh, Market for last week uh, approximately at the same level when it was last Friday, but volatility dropped down. Last Friday it was about 22 VIX, but right now it's 19.5. So very good week. And let's see our portfolio, which we still hold. It's ES Futures. This is altogether how it's look like. Yes, it show negative number right now because some of positions which was in profit we closed, and option at Explorer stop counting that P&L if we close position. It just shows positions which we still have open. Uh, let's see how they look like one by one. So the first one, as usual, we check Balalaika. This is how it's look like. Total delta around 0.665, and our closest short put is 40 days till expiration, and it is at delta 11.5. The second one is 70 days till expiration, and it is at delta 7.5. So I think we're okay here. What else we have? Let's see our CDHs. I will show you all of them together. We have three of them. So this is how it's look like. It's pretty good hedge. It's in profit 4200 after market decline, and has a pretty good altogether delta minus 16. We're still holding it against our short position, and we will see if we need, as usual, roll our naked puts. If market will be down again, we will cash some profit from this CDHs. Income 1, 2, and 3. Income 1. Oops, it's together with CDHs. Income 1. It is approaching maximum profit, which is close to zero after rolling. So it is 70 days till expiration at delta 9.35. Nothing wrong with that, except it's long term and we have to hold it for longer time. Income 2 is also at 70 days till expiration and at delta 9.3, also not too bad. And income 3 is a little bit better at 56 days till expiration at delta 10.2. Let's see all of them together with CDHs, how they look like, and will be very interesting. Here it is. They are with CDHs approximately at zero loss right now, and altogether they have a positive delta 17.6. Not bad, I think we can handle it. Also, we still have our D ladder trade. Let's see how it's look like. D2 and D5. Oops. Strange. Oh, something wrong. I don't know why it doesn't show it correctly. I have no idea. Maybe problems with Optionet Explorer again. Let's see our Kazoo trade. Kazoo 3 small is virtually at zero delta. Yes, we are in loss, but I hope we will get at least something before we close it. So the closest one at 40 DTE at delta 7.3, nothing. It's not risky now, and probably we're gonna close that soon and reopen it because it's nothing much to get from this position. Kazoo 3, big one, is a little bit better. It's just $1,000 in loss altogether. This is how it's look like. Let's see Kazoo 4. Kazoo 4 small. Also delta is very small, 1.6. It shows minus 700 loss. I think we can get something from it. It is also 56 days till expiration for short puts, and we can reduce that loss probably $300-400 in the future. Kazoo 4, big one. It's bigger loss, but also has more chances to get that losses back. And Kazoo 5 should be in profit, I guess. Yes, Kazoo 5, the last one which we opened when market already declined. It's 40 days till expiration. Shows small profit, $236. And Kazoo 5 big is $1,000 in plus, is also 40 days at delta 10. So that other Kazoos which we lost, I hope guys you close some verticals when we had to roll them also and get some profit from your verticals, so it shouldn't be as bad as it shows right now. Also we have our ratio hedge which we opened some days ago. It shows small loss, but can you see how good it's protecting our position if declining will continue? It shows right now delta approximately 4.7 negative, and it's already reached probably maximum loss which we can get from this position, so nothing to worry about anymore. Only direction from here should be up. Doesn't matter if market go up, our position should improve a little, or if market gonna go down, it will be even better. And we have our violins, which should be in good shape. V10 shows $1,800 in profit, very good. Our shorts at 56 days till expiration, delta about 7, quite safe. V9 is also in small profit, about $500. This is how it look like. Also 56 days till expiration at delta 7.9. And we have some Violin minis. Violin Mini 1, if you remember, our shorts expired. Now we have very nice free delta hedge, which protecting also our position. It shows right now a positive P&L about $600. And again, because we close our naked put, nothing to lose from that position, we're gonna hold it. It is pretty long term. No, it's not long term, it's just 40 days left. We will see. Maybe next week, if we don't need protection and market will behave, we can roll down a little bit our longs to increase our tail to make that position in better profit. Also we have Violin Mini 3. It's in profit 1200. Our shorts are at 40 DTE at delta 5.4. Not bad. By the way, that Violin Mini was converted after market decline to regular Violin. Right now it's regular Violin because we have two shorts against our delta hedge. And our delta hedge still $500 wide, so as usual with Violin, another 10 days, and if our shorts will stay below delta 5, we will roll our longs 5,100 strike 100 points down to increase our profitability. And the last one, which we opened just a week ago, it's Violin Mini 4. It's also in good shape. Just for 1 week, we're already $300, more than 300 in profit. We have just one short at delta 4.7, 40 days till expiration. We will see if it's dropped to delta 3 or less. We probably close that and convert it to free delta hedge. And this way we can be a little bit more aggressive with our kazoo or our income trades. That's it so far. I would like to show again our total position. If we do it till end of April, this is how it's look like. Quite safe. I don't think we're gonna get problems from our portfolio. I hope everybody already adapted for higher volatility and market declines, so it shouldn't be much problem. Also, we have our wheel strategy with our MES position. If you remember, last week we closed finally our short expiration position with huge profit because it was approximately expired and was right in the tent. So we got approximately $4,000 in profit, and we have just one right now. Probably we can start next week adding new expiration. This one 40 days till expiration. We're probably gonna go to 70 days new, our new expiration for this strategy. This one shows small plus, very good, so very safe. I hope you like this strategy, guys. It's not very risky. Even in market decline, we managed to make very good profit. What else? We have our oil position, which is, by the way, approaching our tail profit. If you remember, oil was down here approximately a week ago to 66, 65 area, and we had to make an adjustment of that position, and that adjustment reduced a little bit our tail profit from 500 to about 350. So right now we're at tail profit. Let's hold for another week or so. Right now it's 55 days till expiration. We will see. We're probably gonna get more profit from it. Or we can hold it the same way as we did with MES as a protection for our new expiration. We can open another oil position, 87 days till expiration, same way, and keep both of them. We will decide what to do. Also we have TLT position, which is in very good profit. By the way, this week we closed our shortest expiration. It's just a couple of days left. I believe that one which we close is expiring today, right on the bull eye. So it was 90 strike. Right now it's trading at 91.2. So it's huge, give us huge profit. We have right now the closest expiration 27 days, and also have expiration at 56 and 120. Also we have, guys, our stocks, which we start trading our new way with straddles. All of them in good shape so far, except a couple of tech stocks like Google and Amazon, but they're recovering also, so it's not a big deal. All others in good shape. Pepsi, PG, which we opened yesterday, I believe. CVX, SLB, Schlumberger is doing well. XOP is very good. If you remember, we had big loss when when XOP sharply declined. Now it's bounced up, and our position in good profit. Nvidia in good profit, or in good profit. So far it's okay. Again, guys, about that course, I will try to do it this weekend. I know that you're waiting for that, sorry. I think you're gonna be excited. It's a very good course, and it is a strategy which I don't know. I never met anybody who actually run strategy like this. You know that usually people use options just for trading or for protecting stock portfolio, but I didn't see anybody use options as a investment tool. So this is what we're trying to do. So very excited. I hope you will be happy. It's very slow and low touch strategy, and we will make good money from it, I'm pretty sure. Let's see what kind of questions do you have in Discord channel for this video. Here it is. I would like to know your opinion whether vertical ES as a hedge in combination with MES income trades is still a valid option compared to the CDH trade. I think I feel more comfortable with 1-to-1 ratio. It's Daniel asking. Sure, Daniel, of course, 1-to-1 make you're much more safer because it's harder hedge. Nothing wrong without it. And again, I repeated, I don't know how many times already. CDHs is a free hedge. Anything which is free, you shouldn't expect that it will be perfect. But because it's free and it's working all of our CDHs in profit right now, and it's already safe as we use it at least once to get some profit from it to finance our naked put rolls. So both of them valid. So more hedges is better. Uh, my point is right now we have how many, 3 or 4 different kind of hedges. Which one better, which one worse? It depends of market condition because we cannot predict what it's gonna be in the future. I prefer to have all of them. Do you know, one of them behave better than another in different market condition. If we have 2, 3, even 4 kind of hedges, it's good, and at least 1 or 2 of them will work very well. If market decline with increased volatility, if the decline with not increasing volatility, it's going to be different situation. So it's still valid, and I'd recommend to use it and open more if you need it. Next question: can we have the small kazoo updates with small account? The closing the long updates this week so we can start doing it. Do we possibly in the future doing some weekly trades in the futures or 0-1 DTE for possible locking in $30-50 per day an average to grow account for smaller guys? Well, about 0 and 1 DTE trade, guys, if you would like to do it, you have to find another Discord channel. I don't do that. I don't recommend to do that. It's just killing your nerve cells. I think nothing good about that. So you can get 5 winners, and after that 1 loss will be bigger than 5 of your winners. So it doesn't worth it. Just make your broker happy. And about small kazoo, yes, we will continue to play that. Unfortunately, right now it's not in very good shape. We're gonna close it soon and reopen new one to start doing it again, same way as we started before. Tom asking, please do a deeper dive into the small kazoo strategy for larger accounts, especially since it's a little different than the regular and small kazoo with management. We are rolling down the 1-to-1 shorts at 20 delta and closing a long. I think there's some interest in the large group. Thanks. Yes, Tom, it's in this kind of market environment when the market can decline and decline sharp and much more often. I think that small kazoo for big account is a good choice. But why? Because we have equal amount of longs and shorts. Let's say we have 5 longs, 5 shorts. So how are we gonna manage it? If market go down, we can close 1 long, completely close it, and use that credit to roll all 5 for our shorts as down as we can with this credit. Why it's a good strategy? Because second roll, if you need second time roll and your short naked puts will reach again delta 20, your longs will be already extremely expensive. So at second time you again closing 1 long, which gonna be very expensive, and use again that credit to roll your 5 down again. So at that point, after second roll, you will have 3 longs and 5 shorts. And I believe after second roll, your longs will be higher strike than shorts and will be, of course, longer term. If you need the third one, we still can close the third one long and keep just 2-to-5 ratio, but I don't know. We can check it, and we can from that point, because third roll our longs will be so expensive and so high delta. Maybe we will just roll them down, three of them, and use that credit to roll out our shorts. This is how we're gonna manage it if market go down. If market go up, same thing. We wait at least couple of weeks, and when delta of position will be negative, we just close one long and keep 4 longs against 5 shorts. This way we will increase our positive delta from negative to 0, or maybe small positive delta, and continue to hold it. If market continue to go up, and we wait probably another week or two, and after that we can close another long and make it 3 longs against 5 shorts. This is how I will manage this small kazoo for big accounts. Even better probably to run it 10 longs, 10 shorts, but I don't know if your account this big. Probably 5 to 5 gonna work fine. I believe that other questions is from the previous video. Let's see, for ink trades, are we going back to vertical hedges due to current market condition and high VIX from CDH? Also, what is the plan for 3 CDH we have open at the moment in the model portfolio? Again, guys, nothing wrong with CDHs. CDH performing well. When market bounce up, I believe this week Daniel asked this question. To be prepared for next leg down, you can and probably you should close one of your naked put of your CDH, or how we did it a couple of days ago. I believe yesterday we closed one long and closed 2 shorts and convert that CDH to calendarized vertical hedge. Now it's a hard hedge. It's gonna help us if it's gonna be another leg down. Or you can roll down your shorts to make that CDH wider. It's also help to increase negative delta, and believe me, it's gonna work. About verticals, vertical hedges, guys, are very good hedges, but unfortunately they are quite expensive when volatility is high. I prefer to open vertical hedges when volatility is low. Right now, I prefer to do delta hedges long term, and CDH is gonna work too. So this is my opinion. What is better for higher volatility. But again, if you're comfortable with vertical hedges, you can still continue to open them. No problem with that. That's it so far. Looks like I answer all questions. Thank you very much, guys. Have a nice weekend. Again, it's very good day today. All my positions, naked puts and hedges are green, which is very good. I love that. And I hope you performing also very good, and have a good weekend. Be safe. Thank you very much. Bye bye.